I don't think silver is going to stop at 100. I think that you could see by the end of the year $200 silver, and you know, gold could be getting close to 10,000. But I think if we get a break in the dollar, if the dollar index, which is right now, 98, 99, if we break down to about 70 by the end of the year, yeah, we could easily see gold. I don't know if gold will hit 10,000 this year. It may not, it may take till next year, but I mean, it's going there. But silver, silver could hit 200 before gold hits 10,000.
Peter Schiff has just made one of the most shocking forecasts yet for gold, silver, and the US dollar, and it has nothing to do with optimism about the economy. He says gold is heading toward $10,000, possibly faster than anyone expects, not because of growth or stability, but because the dollar itself is losing value at an accelerating pace. But what really turns heads is what Schiff says about silver. He believes silver could reach $200 and potentially do so before gold reaches $10,000. And according to him, this isn't driven by speculation or hype. It all hinges on one singular event that is already unfolding as you watch this video, an event that directly threatens confidence in the dollar and the entire financial system built on it. Schiff's argument is simple but unsettling. Once the dollar breaks decisively, precious metals won't move gradually. They'll reprice violently. And while most investors are still focused on stocks, CPI prints, or political headlines, gold and silver are already signaling that something underneath the surface is breaking. So before we go further, I want to hear from you. Where are you watching from, and are you buying gold, silver, or both right now? How are you positioning as prices begin to validate what precious metals investors have been saying for years, even while these assets were dismissed, mocked, or ignored? Drop your thoughts in the comments and make sure to stay with us because what Schiff lays out next explains why this move is only just getting started. Lastly, don't forget to like, subscribe, and activate the bell icon for more videos like this. We appreciate your support and hope you enjoy the video.
It's been inevitable that eventually you might have this type of a clash between the Fed and the government, the president, because the Fed has been enabling all the deficit spending and all the profligacy of both parties for decades now. And recently their excuse was that, well, we're below 2% inflation target, so we can print money, we can create inflation because the rate's too low. We need to move it up to the target. But, now that the rate is well above their so-called target, we got the CPI out again today for December, 2.7. We're further above 2% than we were really ever below it. And when we were below it by zero point 0.7, it was, oh my God, we need QE, we need 0% interest rates. This is potentially a catastrophe. We don't have enough inflation. But the Fed is cutting rates now, even though we're as much above 2% as we were below. And again, I don't put a lot of stock in the government measures. I think what's happening in gold and silver is a lot better indicator of where inflation is headed than the backward-looking, highly rigged government numbers. But at this point, the Fed really needs to raise interest rates. Not that it's not cutting them enough; they need to go up. But the problem is the government can't afford the higher rates. And that's the predicament that we're in as a nation. And that's the dilemma that I always knew was coming, which is choosing, how you want to die. Do you want to die by inflation or do you want to die by financial crisis? Either there's going to be a default or there's going to be massive inflation. And, politically, it always seemed like the latter was the most expedient path. And that's obviously where we're headed. And, maybe the Fed is somewhat reluctant. Powell is a bit reluctant to do that. But that's what's going to happen, and it's not just the government that's all levered up, but it's the voting public. People have a lot of debt and they need lower rates. But the problem is rates are already too low. And now you're starting to see that in gold and silver. Soon you're going to see it in the foreign exchange and the bond market, meaning that you're going to see a big move down in the dollar relative to other fiat currencies, and you're going to see a big move down in the long end of the yield curve, which, of course, is going to prompt the Fed to get even more aggressive in the inflation creation to try to put a lid on longer term interest rates. And that's when the bottom will drop out of the dollar. And, if you think gold and silver prices are going up fast now, wait do you see how much faster they're going to be going up. Ironically, they're going after him not for the building, it's for lying to Congress about the renovation. So it's basically, for lying, which, I mean, they all lie. Everybody in Congress lies. The president lies. In fact, when the president was asked about this investigation of Powell, he said he didn't know anything about it, which of course was a lie. There's no way that he doesn't know about this investigation. In fact, there's no way that he's not the one behind it. So it's ridiculous to say we're going to, charge Powell for lying. I mean, all these guys do is lie, and they lie about much more important things than the elevators in their building and how much they spent on them, or whatever, the executive bathroom. So yes, Powell is correct. It's all a pretense, just like with Lisa Cook. It wasn't about mortgage fraud. It was about getting rid of her. Not that she was this, huge hawk, but Trump just wants to make sure that his flunkies are in control of the Federal Open Market Committee. He wants to basically pack the FOMC the way Roosevelt wanted to pack the Supreme Court. He wants the Fed to be far more aggressive in creating inflation than they would be, if left to, on their own.
The Fed have reduced rates last year, at the back of last year. I mean, how much lower do you think Trump wants them before he's happy? Because the trend was that they were reducing
wants
anyway.
them. He probably wants something, maybe 1%. I mean, he says interest rates should be a lot lower, not like, a couple of extra 25 basis point cuts. He wants to really goose the economy and goose the stock market because he wants to take credit for it. Right? He doesn't want an economic downturn, recession. He doesn't want a bear market. And he wants to try to do something about affordability. So he wants to bring down mortgage rates or credit card interest rates. But the irony of it is everything that the Fed, or he wants the Fed to do to lower interest rates, will end up raising the cost of living, because the only way the Fed can lower rates is by creating inflation. And ultimately, not only does inflation push up consumer prices, it's going to push up interest rates.
What Schiff is really exposing in this first section is the structural trap the Federal Reserve has backed itself into. Inflation is still running above target, yet rates are being cut, not because price stability has been restored, but because the U.S. government can no longer sustain the interest burden on its own debt. For years, the Fed justified extreme easing by arguing inflation was too low. Now, with inflation clearly higher, the same policies are being reintroduced under different language. Schiff's point is that gold and silver are responding to future inflation, not past data. Government CPI numbers are backward-looking and heavily massaged, while metals price in what comes next: renewed money creation, yield suppression, and an eventual loss of confidence in the dollar. This is why Schiff insists the Fed should be raising rates, not cutting them, but also why he knows they won't. Politically, higher rates mean fiscal pain, market stress, and voter backlash. Inflation, by contrast, spreads the cost quietly across the population. That choice, Schiff argues, has already been made, and the early signals are showing up first where they always do: gold and silver.
We're basically back to QE. I mean, the Fed announced that. They just didn't call it QE. They said we have to manage our balance sheet, and so they're buying treasuries. And now you have Donald Trump ordered Fannie and Freddie to start buying mortgages. So we're getting it, right? The Fed is buying treasuries. The GSEs are buying mortgages. This is just the beginning, and they're going to be cranking it up as there's more pressure to do it. I don't think silver is going to stop at 100. I think that you could see by the end of the year $200 silver, and gold could be getting close to 10,000.
Really, by the end. So you're looking. Are you looking at that as the value of the dollar is going to drop by 50% over the next 12 months, and therefore?
Well, again, it could drop by 50% against gold. It may not drop by 50% against the euro. But I think if we get a break in the dollar, if the dollar index, which is right now, 98, 99, if we break down to about 70 by the end of the year, yeah, we can easily see gold. I don't know if gold will hit 10,000 this year. It may take till next year, but I mean, it's going there. But silver, silver could hit 200 before gold hits 10,000.
How are you reading the rest of? I mean, does this change your outlook massively, even just these 2 weeks, in terms of what 2026 looks like?
My outlook is pretty much the same as it was for 2025 when it comes to the precious metals, continued higher. I think the dollar should be weaker in 2026 than it was in 2025 because we only had weakness in the first half of the year. The dollar kind of stabilized and bounced back a bit. And I also think we'll see more weakness in the bond market, unless, of course, the Fed comes in with an aggressive QE program or steps up what they got now, and that might slow the rate of rise of bond yields, but it will accelerate the move up in gold and silver and the move down in the dollar. The dollar is going to be debased. They're going to print a lot of money, and that money is going to lose most of its value. And the foreign central banks obviously were able to see this, and they started accumulating a lot of gold a couple of years ago, and they're continuing to buy. The public is now waking up. They're buying silver. So, you're going to see more and more money fleeing the fiat dollar-based system into real money. And it's interesting that, the money's not going into Bitcoin. So it looks like that bubble has gotten a bunch of holes in it now. And I think the Bitcoin is digital gold false narrative is going to be deflating. Well, look, eventually, I think all the governments are going to have to be back on a gold standard because they're going to destroy the value of their currencies. And so, how do you repair that? How do you reinstill confidence? How do you get a money that the public can trust? It needs to be gold. I mean, you can't just wipe everybody out and then just say, "Here's a new fiat currency. Take this one." Why is that any different than the last one that went to zero? So, you got to back it by something to create confidence that it's got real value.
Does the foreign policy side of things that we've seen this year, that even just at the beginning of this year, does this accelerate the timeline in any way as to, because it just seems like confidence is really slipping at the moment. We're seeing how far the dollar's slipped.
Well, I think it should be slipping, but it's not. There's a lot of complacency out there. Look at the bond market, look at the dollar. So, but obviously you can see it in the precious metals market, but only the precious metals market. Well, prices are going up too. I mean, copper hit a record high. So, it's not just precious metals, but it's all, and it's all the precious metals. There's platinum, palladium, everything is moving up. So I think the metals are more sensitive to increases in the perception of the inflation risk and a loss of confidence in the dollar than other markets might be. But those other markets will ultimately react to what the precious metals market has already sniffed out.
What Schiff is describing is not just inflation, it's currency debasement under pressure. The Trump administration has made it clear that it wants interest rates pushed down aggressively, not incrementally. Lower rates mean cheaper debt, higher asset prices, and short-term political relief. But the only way the Fed can deliver that in today's environment is by creating more money, expanding its balance sheet, and tolerating higher inflation. That process weakens the dollar by design. This sets up a power struggle between Jerome Powell and the White House. Powell understands that cutting rates while inflation remains elevated risks unanchoring inflation expectations and undermining confidence in the dollar. But political pressure doesn't disappear, it intensifies. Schiff's point is that Powell's resistance only delays the inevitable. Once Powell exits later this year, Trump will have the opportunity to appoint a Fed chair far more aligned with aggressive easing, QE expansion, and yield suppression. When that happens, the implications for the U.S. economy are profound. Americans may see lower nominal interest rates, but they will pay for it through a higher cost of living, weaker purchasing power, and rising prices across essentials. Debt becomes easier to service temporarily, but savings lose value. This is the trade-off Schiff has warned about for decades. Policymakers will always choose inflation over default because it's politically easier, even if it quietly destroys the currency. And this is why gold and silver matter so much in this environment. Precious metals don't need confidence in government policy to rise. They rise because that confidence is fading. Gold reflects the loss of trust in fiat money, while silver adds an additional layer of pressure due to its industrial and strategic importance. If the dollar weakens sharply, as Schiff expects, gold doesn't slowly grind higher, it reprices. And silver, historically undervalued during monetary stress, tends to move faster and harder. That's why Schiff believes silver could hit $200 before gold reaches $10,000, and why this move, once fully underway, may leave most investors watching from the sidelines. If this analysis is resonating with you, I'd really appreciate your support. These conversations matter because they cut through the noise and focus on what's actually driving markets beneath the headlines. If you found value here, please take a moment to like the video, share it with someone who's trying to understand what's really happening to the dollar, and subscribe so you don't miss what's coming next. And most importantly, jump into the comments. Tell us how you're positioning, what you're watching, and whether gold or silver is finally proving you right after years of skepticism. Your engagement keeps this channel going and helps push these discussions into places where they're still being ignored. Thanks for watching.